Hi everyone, welcome back. Today we're going to look at an interesting topic, how to maximize your profit in a trending market. So we're going to cover two trending markets. One is the uptrending and downtrending. We're going to look at how you can spot the right time when you can start to buy in a trending market, be it uptrending or downtrending. So basically you can maximize your profit during uptrend, but during a downtrend you can actually minimize your losses by doing this approach. So without wasting time, let's start. We're going to look at the uptrend, how to apply this technique or rather this strategy in uptrend. So we need to have an uptrend. Okay, so this is an uptrend because you have higher high, a higher low, right? So now what you have to do is you have to first you got to have two retracement. So you have two retracement here. This is your first retracement. That's a second retracement. So we're going to use the first retracement as our reference point. Okay, so I'm going to use a pen instead of highlighter, X1. So as for the second retracement, you have not fully experienced it. You have just like starting to see a retracement. So the idea is to at least have 1/3 of your X1. So you can actually look at your X1, try to divide it to 3 portions. So this is the height of your first, this part is your height of your first portion. So you can have that much. So once you have that much, you can start to, but that's going to be your X2. This is going to be your X2, but it's just starting to begin the retracement. So once you can see that it's beginning to do a retracement, you can okay, one thing, this has to be uptrend, but to have an uptrend you definitely need to have another higher low and higher high somewhere here. Okay, so we need to confirm on the uptrend. So only when you have two, this is one point, this is second point, higher high, two lower, higher low, only then you can confirm that it's an uptrend, right? So we need to have a confirm uptrend because we can apply this in a sideway. We can only apply in an uptrend and downtrend. So we have to confirm the trend. So let's say we have to confirm on the uptrend. We want to enter as soon as possible. So in the next leg where we see a retracement, so the moment it has retraced like 1/3 of your X1, then what you should do is you start to measure the angle of attack here. This is the angle of attack. I highlight it. This is the angle of attack. So let's say this angle of attack is like 90 degree. So this is your 90 degree of angle of attack. So now you have to, you can, because you already have 1/3 of the height of your X1 here, so you can already start to do your measurement of your height. So let's say this height is also 90 degree, right? So if it's also 90 degree, then what you can project is, you can project that let me take a different color. It's gonna, the height of this is going to be, the height of this is going to be the same as the height of this portion. Okay, so assuming that this is a $30 downfall, so this is also going to be $30 downfall. So because the angle of attack is 90 degree the same. However, if the angle of attack, so now I'm going to erase it. Okay, let me erase it. Okay, if this angle of attack, so let me modify a bit. So if this angle of attack is like more steeper, like this, okay, it's more steeper. So now my angle of attack is here, so that is like, maybe I can estimate this as 45 degree. Okay, if it is 45 degree, then what will happen is your reference point, your X1, right? So your X1 downfall is about $30. Because this is actually a sharp fall, that means there's a panic sell kind of thing. So the fall is going to be, because if you try to overlap, if you try to overlap the x1, so because x1 is 90 degree, right? So it's somewhere around here. So if your x1 fall like $30, right? Because of the angle of attack of your this fall is $45, is much more steeper, then the fall is also going to be much more steeper. Probably it's going to fall like $50. Okay, let me write properly. So it's going to fall like $50 because of the angle of attack is much more steeper. Okay, so that is that's how you can do a prediction how far it's going to fall, because you want to buy cheap, right? So because if you already notice the angle of attack is already 45 degrees, then you should actually wait longer, because the fall is going to be even heavier than what you experienced earlier, which is at $30. So it's going to be, so if you want a hint how far it's going to fall, usually it's going to fall at the next resistance. Let me try to recall myself. So if you have a chart, right? So that's your support, right? So that's your resistance, right? So that's your resistance. Okay, so I hope you guys are aware of this support and resistance, how to find support and resistance. Okay, I'm going to do it clearly here. So let's say, okay, so this is going to be your support. That's going to be your resistance, right? So this is just a recap. Those who are already trading, they already know what is support and resistance. Okay, so now this 45 degree fall is going to make you to go to the support. So it's going to fall up to the, so you can try to look at some support point at this uptrend. It's going to fall to that support, some support immediately after your the first the first X1 reference. This is the X1 reference which we put it at $30. So you try to find immediate support that is after your X1. That is the likely point where it's going to fall to, but it's definitely going to be more than $30. It's somewhere is going to be like 40, 50, depending what's the next available support. Okay, so that is if the fall of your X2 is steeper. Now I'm going to erase again. So this time I'm going to show you what happens if it is flatter, not as steep as not as steep as what we saw earlier. Okay, this time it's going to be flatter like this. Okay, if the fall is flatter, but again, you don't really need to have. You just need 1/3. So the moment you have 1/3 of fall, so like 1/3 that you experience here, minimum you need to have 1/3 of the fall, because we need to measure the angle here. Okay, we need to measure the angle. So this angle, because it's flatter, is going to be higher. So let's assume that this is 100 degree, right? This is 100 degree. If it is flatter compared to your original, this is your original, right? So original is 90 degree, right? So 90 degree fall was like about $30, right? $30. But because it is flatter, it's going to stop much earlier than the $30. The height of your fall is going to be much shorter compared to the earlier X1 fall. So you can imagine that it's going to fall somewhere around $20. So the height of this is probably going to be about $20. How can you estimate it's going to be around $20? Is because again you need that okay, that's your support, that's your resistance, right? Okay, so basically just now when it is steeper we look at the support, but if it is flatter we look at the resistance. So what is the more recent resistance? Somewhere around here, just above that $30 distance. So you have the $30 distance here, right? You have the $30 distance. What is the most recent resistance just immediately before that $30 fall? Okay, so perhaps it's 25, 20 or something like that. Okay, so that's where you can roughly estimate where is it going to stop. But according to this study, this is actually a technique known as R technique. So in this technique, right, so we look at the angle of attack. If it is much more steeper, it's going to fall more. If it is flatter, it's going to fall less. And we can have hints like the support and resistance to actually help us to decide where is actually estimate point where it's going to do a reversal. But we can actually get more accurate reversal by doing using some candlestick patterns, reversal patterns. So that's going to be much more precise, I would say. Okay, so this is the uptrend scenario. Now I'm going to look at the downtrend scenario. Okay, I'm going to look at downtrend scenario. So it's going to be the same. So you're going to have downfall, then you're going to have retrace, then you're going to fall, retrace, fall again, right? So make sure this is the downtrend. So how you know it's a downtrend? Basically, you need to have lower low, two lower lows, two higher lows, two higher lows. Then you know that it's going to be a downtrend. Again, the idea is the same. Okay, you can look at the angle of attack here. So how do we measure this angle of attack? You can actually look at this angle. I'm going to color code it. So you can look at this angle of attack here. So let's say this angle is like 45 degree. Right? Then you can also look at, that is your x1. I would say this is x01. So you got to have at least 1/3 of the distance. So assuming that you don't have these parts, but of course you need to make sure that it's an uptrend. So basically you need to have 2 points, lower high, lower low. Okay. So let's say here you are going up slightly. So at least it covers 1/3 of your x1. So then what you can do is you can try to measure the angle of attack. So this portion, or what is the degree of it? So if this degree is 45 as well, then it's just the same conclusion as what we did earlier. That is the height of this. If the height of this is $30, then it's going to roughly go as much as that $30. The same height. Okay, so it's going to go that much. So that means if you actually if your share market, or rather your stock market, is actually going down and you are thinking about selling it, you have a chance, if it is starting to retrace, to wait for a while to get slightly better price. So basically you can minimize your losses, okay, by selling slightly higher once it start to do retracement. And you can expect how much high is going to go. It's going to be, because of the angle of attack is the same as your x1. So for your x2 here, it's going to have the same, because it's the same angle of attack. It's going to go as same high as the x1, right? But now we're going to look at another scenario. So let's say now it's not 45 degree. Okay, your angle of attack is not 45 degree, but perhaps it's much more steeper. It's like this. Wow. Okay, so I'm not going to draw the full thing yet. I'm just going to have 1/3 of it. So you just need 1/3 of the move here. So let's say now this angle of attack. So you need to have 1/3 of your x1. Right? So this distance is actually 1/3 of your x. Okay, let me show it. This distance is like 1/3 of your x1. Okay, this particular distance is 1/3 of this x1. Okay, so once you confirm on that, so I can roughly measure this height. So maybe this is like around 60 degree, I would say, much more steeper, right? So if it is much more steeper, that means there is a sudden immediate interest in buying. So therefore its tendency is of it going steeper. Oops. It's going to go steeper like this. Okay, so if this one, earlier x1, actually retraced by $30, then maybe perhaps this one can retrace. Definitely it's not going to go that far high. Maybe it's because it's a downtrend, right? So we kind of estimating that it's going to be downtrend. Okay. So if it goes further up, of course it's going to be your luck. Okay, but here let's say that it goes up, but it's like going up to $50. Okay, let me put it clearly. $50. So it goes as high as $50 because of the angle of attack is steeper. Okay, so steeper angle of attack will mean it is going to go higher because there is more buying interest, right? But then how do you estimate that $50 is actually quite simple. So you need to have that okay, so if you remember this is your support, this is a support, this is a resistance, right? So this point is a resistance point, this is a support point, right? Okay, so in this case because it is sharper attack, so it's going to go all the way to the resistance point here. So what you have to do is you have to find somewhere here a resistance point, some resistance point somewhere around here. So that resistance point should be above. Okay, so if I try to overlap your x1, I will use a different color. So let's say this is your x1. So this is your x1. So it goes up to so it goes all the way $30 up. Okay, it goes all the way $30. So let's say the height of this is $30 because it's the same height of this, right? This is $30. So here we imagine $30. So you can imagine that this particular upward move that we are studying right now is definitely going to be more than $30 because the angle of attack is steeper. But where is it going to stop? So rough estimate is at the most recent resistance point after that $30 increase. Okay, so that's how you can find. So I give you another example. This is actually when we have a steeper angle of attack, right? So what if we have a flatter angle of attack? So I'm going to erase, I'm going to redraw again. Okay, so now let me have a flatter. Okay, I'll change my color as well. So let's say this is flatter, right? Comparative, this is 45 degree of angle attack. So but this one, you can see that this degree of attack here it's only like perhaps 30 degrees, right? So because it's a flatter and this is your draw in green, this is your original degree of attack, which is actually distance of 30, right? So your blue color is the recent one. This one is going to be not as high as 30. It's not going to climb as much as 30, but it's going to be less than that, probably $20 because the angle of attack here is flatter compared to your x1, right? So how do you know is it going to be 20, 10, 15 or 25? So you will know that by looking at the support part. So you look at the most recent support around this region, which is below that $30 height. Okay, that difference of $30 height. So you try to find some support point somewhere around here below your $30 height, your x1 $30 height. So that's roughly where it's going to do a turning point. Again, for more precise turning point, you have to look at studied reversal patterns of candlesticks, Japanese candlesticks. Okay, so this is the theory part of it. So I'm gonna so how can you benefit from this particular analysis? So in an uptrend, you know when's the right spot to enter, because it's not good to enter at a high price. So when you see a reversal or retracement, not reversal, sorry, when you see a retracement, that's the right point to start to think about entering. But then how far is going to retrace is another issue. So the study that we have done looking at the angle of attack, it gives you a hint where probably the retracement is going to stop. So at that point when it stops, that's where you can start to enter. That's the best place so that you can maximize your profit. Whereas in the downtrend, because downtrend, if your market doesn't allow you to do shorting, then you can't profit. But of course, if you allow shorting, you know how to short, then it's fine. But then if it is non-shortable market or stock, then what you do is you can minimize your losses by not selling too fast. Wait for a retracement. Unless the climate is really bad, then better sell earlier, right? But if the climate is not that bad, is dropping, but then there's a potential for it to retrace, then you may want to wait for the retracement, because when it retraces it may go slightly higher, right? So maybe you can minimize your losses. That's how you can play with this strategy. So again, this angle of attack, it's not useful when it's in a sideways market. It's more useful when it's uptrend or downtrend market. Okay, so if you like my video, you can subscribe. You can also like my video. After this, I'm going to put another video which is actually going to explain about the application of it. I'm going to take some real stock market, what do you call the share prices, real companies, and try to apply this technique. Is it applicable or not applicable? We're going to see then. Okay, wait, stay tuned for my next video.